Welcome to our February 2024 monthly market update. Here we are during the month of love with the most romantic holiday around, Valentine's Day, of course. And maybe you're thinking of falling in love with the perfect home this year. So if that's the case, make sure to stick with me to the end of this video because we have a lot of great information about the housing market and all the shifts and changes that are happening right now. So grab a box of chocolates and some candy hearts. Let's dive in. Let's start with our inventory levels. So in February 2024, we find ourselves with approximately the 6.31 months of supply for homes in our market. Now that's indicating a fairly even balance between supply and demand. So this is neither a seller's market nor a buyer's market. This uptick in inventory compared to previous months is giving us a more neutral market dynamic right now. Now this is largely due to the slowdown in home shopping during the holidays, which resulted in a low number of closings happening in January. And now that's a very typical thing, as January usually has the lowest closings number every year, but we've seen a surge in homes coming into the market last month as well. So that higher supply number right here at 1885 and then 1276 pending, these higher supply numbers divided by this lower closing number makes our months of supply metric rise to this 6-month level. Now we do expect that number to drop again into the coming months as more and more closings take place into the spring, and by early summer, we expect to be back into a strong seller's market. Now, if we look at the yearly transactional data, we're seeing some really intriguing patterns, okay? So the total number of closings in 2023 dipped all the way down to this 9,804 number, down from 10,923 in 2022. That's marking a 10.24% decrease year over year, as you're seeing right here. And we have to go all the way back to 2015 to find a slower selling year. So even in 2016, we had a few more sales than we had in 2023. Now with these 530 sales recorded in January, that lower trend is continuing into 2024. However, most of these lower sales numbers in 2023 may have simply been due to lower supply. We just didn't have that many homes available last year because many potential home sellers, people who might really need to make a move, held off because of the interest rates and the payment shock they would experience if they made that move. But with this 3,193 active and pending listings, we're starting to see more supply. You see this uptick right here in our market. Also, I have to point out that this January sale number is always the lowest number every year, as it was here in 2023, 2022, 2021, right here, okay? In January, the average days on market clocked in at 74 days, while the median days on market stood down here at 56 days on market. So this is actually in line with what we saw back around 2019. Okay, so obviously everything dropped in 2020 and 2021. Things were selling super fast. This is really in line with what our market was like before the COVID era. So overall, properties are still moving pretty quickly once they hit the market, with a significant portion of them finding buyers within just the first few weeks of listing. But it's definitely a slower pace than the frenzy that we saw in 2020 and 2021. As for pricing, January saw an average sale price of $404,980 right here, and a median sale price of $340,450. Despite what the interest rates have been rising and everything, we still had more buyers than sellers last year. So even though we have seen lower numbers of transactions, the demand for homes has actually outpaced our local supply, and this has kept our prices rising even as the market volume contracts. So you can actually see here this average sales price is higher now than it was at the beginning of the year. Okay, same thing with this median. It's still an uptrend. It's slowing a little bit. It's not as abrupt of an uptrend as we saw, 3, 4, 2 years ago, but this year was still an uptrend. So of course, our average price per square foot remained pretty consistent around $200. And that's just showing the resilience of this pricing in our market. You can see here in Bentonville, this was the highest priced area at $222 a square foot. Fayetteville was at $206. But even in Washington County, it was $192 a square foot. Benton County right at $197. In the realm of financing, the 30-year fixed rate mortgage average in the United States remained steady this month around 6.6%. So now that's leveling off at these borrowing conditions here for about the last month or so. Now, however, the overall trend and the industry forecasts are suggesting that rates will be going lower over the coming year. So we expect a lot more buyers to come into the markets this spring and summer. Again, these higher rates created a lock-in effect for most of 2023 where, current homeowners saw really no benefit to selling their home and giving up their low mortgage payments, even if they really needed to make a move, for family or professional reasons. Those higher rates also kept many potential buyers on the sidelines this year, first-time buyers, which was creating a dampening effect on the true pent-up demand for homes. And that's what's caused our number of closings to contract for the last 2 years. But as we move ahead into the remainder of 2024, it's going to be essential for both buyers and sellers to remain adaptable and informed. While the market landscape may shift, there are a lot of opportunities for those who are willing to jump on them. So whether you're in the market for your dream home or you're considering selling your property or both, maybe selling one, buying another, all of us here at the Lonerock team at Fathom Realty would love to assist you every step of the way. And so to wrap up, February 2024 holds a lot of promise and potential for our Northwest Arkansas real estate market. With inventory levels stabilizing and pricing remaining resilient, there's a lot to be optimistic about as we move through this year. So thanks for checking out this monthly market update. We'll catch you on the next one.